Over the past month, XRP's price action has unfolded entirely within a descending parallel channel that began forming in early August. In a descending channel, each rally hits a downsloping resistance line, and each pullback finds support at a roughly parallel lower line, producing lower highs and lower lows. The chart shows that since around August 2nd, XRP has failed to close above the falling upper trend line. Rallies in August and late August were capped by that resistance, after which price quickly fell to new lows. In other words, bulls have not been able to gain any traction above the trend line. This constant rejection underscores the bearish outlook. Sellers are defending every rally, keeping the downtrend intact. Specifically, the upper trendline slopes from about $3.66 early August down to around $2.90 now, while the lower boundary connects lows near $2.70, $2.80. These lines form a channel clearly tilting downward, indicating a steady bleed. Traders will note that until price escapes this channel, the bias remains negative. Each retest of that upper boundary has been met with strong sell-offs, preventing any successful breakout, further cementing the pattern. Technically, a descending channel, sometimes called a bear channel, is a bearish continuation formation. In practice, this means that unless XRP can convincingly close above the upper trend line, the expectation is that the downtrend will continue. So far, the structure is held. Multiple breakout attempts have failed, keeping XRP confined. For context, this channel is drawn on the daily chart by connecting the recent peaks and troughs, essentially painting two downward sloping lines around the price. Each time price approaches the top line, sellers step in. By early September, after topping out near $3.66 a few weeks prior, XRP was trading around $2.80. This level sits right at the channel's upper trend line and coincides with a former July support zone that has since flipped into resistance. Each approach to roughly $2.85, $2.90 has been met with renewed selling. The daily charts from late August and early September show candles with long upper wicks in this area before reversing back down into the channel, indicating rejection. In practical terms, bulls have been unable to break the pattern, so sellers remain in control. Volume on these rallies has been relatively muted, underscoring the lack of conviction. Recent daily closes have not produced any higher highs. For example, the September 1st candle could not surpass the July peak. Unless price decisively clears about $2.90, the channel will likely continue to act as a ceiling. For now, bears have the upper hand. Momentum indicators reinforce this cautious view. On the daily chart, XRP's MACD has been stuck in a bearish configuration for weeks. The MACD line crossed under its signal line around July 25th and has remained below it. This means short-term momentum is aligned downward. Correspondingly, the MACD histogram bars have been predominantly negative, reflecting that downward moves have been stronger than any rallies. In practical terms, this indicates buying pressure is weak. Any rally tends to fizzle out quickly. Traders often view a MACD below the signal line as confirmation of bearish strength. In fact, this bearish crossover was an early warning of the current downtrend, and since then, XRP's MACD has not given any bullish signal. As a result, the momentum indicators remain skewed to the downside, signaling that bulls need much more strength to mount a sustained reversal. On-chain data adds to the bearish narrative. Glassnode reports that XRP reserves on exchanges have increased by roughly 2% since August 27th. That means about $3.32 billion. XRP, roughly $9.3 billion now, sit on exchange wallets ready to trade. Such an accumulation is a warning sign. In crypto markets, rising exchange balances usually mean holders are moving coins to sell them. As the analysis notes, this signals that investors are transferring tokens from private wallets to exchanges, often with the intention of selling. In effect, an increasing amount of XRP is queued up to hit the market. If this trend continues, it will likely add more downward pressure on price. Historically, similar patterns of rising exchange flows have coincided with price peaks or breakdowns. In short, the on-chain supply data reinforce the bearish picture. Taken together, these factors paint a bearish near-term picture for XRP. The channel bias, the weak momentum, and the rising supply all line up. One analysis bluntly observes that, in this situation, XRP could be poised for further losses this month. This doesn't mean a collapse is guaranteed, but it indicates bulls face an uphill battle to reverse the trend. In effect, analysts call this a confluence of bearish signals. In the past, when multiple indicators align like this, further declines have often followed. For now, it seems prudent to assume the path of least resistance is down. Traders may manage risk by watching how XRP behaves at key levels $2.63 on the downside and $2.90 on the upside and adjusting positions accordingly. Looking ahead, technical targets become critical. The chart highlights $2.63 as a key support. This is roughly the 50% Fibonacci retracement of the move from $3.66 down to current levels, and it coincides with late August swing lows. If XRP decisively breaks below $2.63 on heavy selling, it would confirm that sellers remain in control. In that scenario, the next logical target is around $2.39, the 38.2% retracement level. A drop to about $2.39 would erase a substantial part of August's gains, marking roughly a 25% decline from here. Traders should be alert at these levels. A bounce could occur if buyers step in at $2.63. But if that fails, sliding to $2.39 becomes much more likely. The bullish countercase requires flipping this narrative. Buyers would need to break out above the $2.80–$2.90 band to shift momentum. A key hurdle is around $2.87–$2.90. One report specifically notes that pushing past $2.87 could allow XRP to witness a rebound and climb higher. This $2.87 mark is near the 61.8% Fibonacci retracement of the decline, making it a significant pivot point. Buyers can drive a daily close above roughly $2.90, preferably on rising volume. It would invalidate the bearish pattern and likely set off strong buying. That would shift the short-term trend bullish. In practical terms, the next resistance levels would be around $3.22 and $3.37, which align with the 78.6% and 88.6% Fibonacci retracements and with prior swing highs. Clearing $2.90 with conviction could propel XRP into the low $3s, drastically changing the outlook. Other technical analyses echo this narrow battleground. A recent Binance Square review showed XRP consolidating roughly between $2.80 and $3.05. In that framework, a breakdown below this range could push XRP toward $2.50, whereas a breakout above $3.05 might carry it up to $3.30, $3.45, our own key levels. Roughly $2.63 and $2.39 on the downside, and $3.22 and $3.37 on the upside fit neatly within those boundaries. The essential point is consistent. The high $2.80 south versus low $3s define the current battleground. Traders should treat the $2.80, $3.05 zone as key. A decisive break above or below that zone would likely spark a sharp move. Until one side wins the fight, the channel remains intact, and caution is warranted. In summary, XRP's technical outlook for September is mixed, but leans bearish. If the downtrend continues, price could test $2.63 and then $2.39 with $2.50 as an additional lower target. Conversely, bulls will watch for a clear breakout above $2.87, $2.90 on strong volume. If that happens, it would negate the bearish setup and likely send XRP into the $3.20, $3.40 area. Volume will be key. A genuine breakout should come with a surge in trading volume. Till that occurs, assume the sellers have the edge in trade. Accordingly, traders should remain nimble and use proper risk management. For example, placing stop-loss orders just below $2.63 or just above $2.90 as they watch how price reacts at these critical levels.